The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the August 12th, the magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. Now, the easiest way to do that, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I want you to know I'm absolutely grateful for your presence here. But even more important than that, and that's this, during this next 53 minutes, I am here to serve you. So feel free to pick up that phone. You can dial on into 877-927-6648. Now, if you've got a question, but you can't call in, Stevie's got your back. Go ahead and send me an email. Send that out to steve@tfnn.com. Inside the subject heading, please put radio show question. And, of course, if you're inside our Tigers Den, well, then any and every ping will do. So let's go ahead and get this show started on magical, magnificent, marvelous Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we start our day with a mixed bag out there. You've got the Dow off 11, Russell's down 9, Trend is down 34, New York Stock Exchange off 2. S&P's up 23 points, 0.5%, 137 points for the NASDAQ, 0.7%. The semis are up 75 points. That's 1 0.6%. So we got some movers and some shakers. Gold is up $20, silver's up 33 cents, Lights Recruit is up $1.40, natural gas is up 2 cents, and the 30-year Treasury basically flat, printing out at 122.24. Now, our leader in the clubhouse to the upside, dollar-wise, Super Micro, $49, Monday.com, $26, nearly 12%. KLA Corp, $17, 2.25%. Costco, $13, 1.5%, and Lam Research up 11 and change. That's $1. That's 1.4% to the upside. To the downside, we got Elf Beauty off about $12, over 7%. B. Riley Financial, $9, 50%. Holy shnikes there. Charter Communication off about $7 or 2%. Regeneron Pharmaceuticals, $6, 0.5%. And the Cigna Group down 1 0.8%. That's over a $6 move to the downside. So we got movers and we got shakers. Of course, I want to look at what you want to look at. Let's begin our day by looking at, well, first couple of things. Let's take a look at the New York Stock Exchange advanced decline indicator out here. See if it's above 0 or below 0. That's panel number 2 from the bottom. It is below 0. Current reading is minus 33 and change out there. That says that sellers are the ones that are in control of the market out there. Could have fooled you. If we take a look at spot volatilics, it is still above its 50-day exponential moving average, headed down towards that. I believe that's what it's going to go target, is that 1710 area. Now, if price were to close below that, boy, it's got a long way down before it catches that next Bollinger Band. That's down at about 1030 out there. But we take things one step at a time. We are trading below Friday's low. Odds favorite continues to move lower, and the S&P continues to rally further. But we're going to go take a look. We're going to move off of this set of charts, go over to our white background set of charts, and take a look at what's going on with regard to the daily time frame for the equity future contract, for the cash indice, for the ETF, and the equal weight if one exists. So let's start by taking a look at the NASDAQ. Momentarily, we'll have a set of screens up here that have the NQ daily time frame over on your left-hand side. Now, on Thursday, that formed a nice bullish engulfing candle. That confirmed a Gartley buy pattern, a buy the D-point pattern. And price is taking on right now, this is the NQ, is taking on its oscillator and change line. If it closes above this level, 18,708, let me just actually open up the daily chart. What you'll first notice out here is price is not closed above the oscillator and change line since, we get a cursor out here, that would be helpful. July 16th, I think it was, July 10th. Yeah, it was not even close. July 10th is the last time that we saw price. So we're over a month now, over 30 days. So that's going to be a key level that if price closes above. Now, you like to see two close above it. First, getting the first close above that is suggesting that we have a change in trend. Now, if in fact that's the case, the price target for the NQ is going to be one of two levels. On this white background chart, you'll see the top of the profile is at 19,480. The black background charts, which we looked at during the 11 a.m. update, has resistance up at 19,717. When I say resistance, I'm referring to profile resistance up there. So watch this 18,707 level. Let's take a look at the cash indice. It's really communicating the same thing to us. Now, it doesn't tell us where it's going to head to. Instead, we would use the NQ for that because we know where the buyers and sellers are at. We know where both buyers and sellers believe there's fair value within inside that trading range out there. But it closes above 18,610 today. Inside of the NASDAQ 100 is going to suggest we have a change in trend and then move to the upside. In the case of the QQQs, the number is 452.79. The next price resistance level on a further move higher, assuming price closes above that level, would be 458.64, followed by 464.65. Now, it's the chart that's on the very right-hand side, referred to as the QQEW. That's the equal-weighted version of the Qs out there. This is right at its oscillator and change line, or very, very close. Let's open this up. So this is going to be the real key battle. Now, does it have to happen today? Not necessarily, but if you do get a close above that oscillator and change line, that's at 118.09. The equal weight will have communicated what you and I just looked at on those others, and that's going to suggest or certainly increase the odds dramatically that we continue the rally higher. Now, here, the bottom of the profile, because price formed above profile out there, is at 119.50. That would be the next upside target. So as of 11:12 right now, you've got three of the four that are looking very good as a change in trend signal. No idea what it looks like at day's end, and the equal weight is trying to participate. Now, let's move from here and take a look at the intraday charts. Let's go take a look at those so-called day trading charts out there that run from a 10-minute up to the daily, but really up to the 5-hour chart. Now, if we just start up at the top on a 5-hour time frame chart, price is trading above profile resistance. There's no topping signal that's in place out here other than wave number 7 that's going to extend itself. This bar is going to close at 2 p.m. So we likely do rally into the close today. There's no topping signal on the 240-minute chart. This suggests that it wants to rally further. The same thing on the 2-hour chart, same thing on the 60, same thing on the 30, same thing on all of them. So I'm not seeing when price gets to a resistance level, such as the oscillator and change line, we would expect to see or anticipate on the intraday charts to see some topping signals. Granted, we are in wave number 7 on the 5-hour time frame chart, but all the other time frames, and that's not been confirmed yet, all of the other time frames do not have a topping signal. So maybe we are getting a change in trend today. Let's move from this and shoot, you know what I got? Well, that's okay. I'm going to do it anyways. Let's do the same thing. I won't be able to grab the intradays that easy. It wasn't the NQ. We wanted the ES Mini out there. I believe that might be here. It is. So now we take a look at the S&P 500. That's left-hand side. We're just going to expand it out. What we can see out here is price is sitting right at that oscillator and change line. Where's that, Stevie? 53.69. Let's call it 53.70. The S&P cash index closed about 53.70 today. Odds favor a further rally. That rally might lead to its most recent high out there. In about the 55.50 plus range. We take a look at the ES Mini. The ES Mini is also testing its oscillator and change line. So we come back to this break. We'll finish taking a look at the ES Mini. We'll do the same thing for the Dow and for the Russell 2000. Then we'll begin taking questions such as NVDL, NVDA, XPEV, SWIM. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call Newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we're looking at the instruments here for the S&P 500 for their daily time frame. We've got the S&P Cash Index, the ES Mini, and the SPYs, each testing their oscillator and change line levels. I gave you that number for the S&P Cash Index. For the ES Mini, it's 5394. Let's call it 5395. Now, the top of its daily profile is at 54.845. So that's going to be the real level of resistance that you want to watch on a move higher. If we get it close above the top of the profile, then we would definitely have a change of trend. Now, all 4 of these instruments have buy the D point or Gartley buy patterns. And the SPY, the number that that price is dealing with at that oscillator and change line, is up at the 535.37 level. Note that. Now, where the QQEW was really resembled the other 4 instruments. Here, when we take a look at the equal weight for the S&P 500, it's got quite a ways to go before it confirms for us. Now, this does have a buy the D point pattern at bottom, but it's going to need to get up towards the 167.19, but really 167.44 is going to be the number. If the RSP were to close above that, we would definitely have a change in trend signal for the S&P 500. So those are levels to be watching there. If we take a quick peek in on the day trading chart, so to speak, again, going from 10 minutes up to 5 hours, 5-hour chart. It also has a wave number 7 top, but as soon as that could be confirmed would be at today's close. The 4-hour chart is bullish. Price is traded above the top of its profile. No topping signal. In fact, it has negated a wave 7 top. No topping signal on the 2-hour chart. It's bullish. The same thing for the 60. Same thing for the 30. Same thing for the 15 and the 10 out there. So the S-Min is suggesting to you and I that it wants to further its rally out there. Next resistance level on the rally is really at about, 53.92. 53.92 would be the last level of resistance that price would need to deal with. Now, it's got that daily levels that we took a look at, and 54.08 is going to be the real key level to watch there. Let's take a quick peek here. We'll do it a little bit quicker, I think, because otherwise I've got to set a bunch of stuff up, and not that I won't set stuff up, but it doesn't make a lot of sense. Let's take a look at the Russell 2000. Now, I don't have an equal weight for the Russell 2000. In the case of the Russell 2000, weaker than the S&P, weaker than the NASDAQ 100. Price is trading above the top of its profile. That's the cash. Sorry, it shouldn't have profile levels on that. Let me take a look at the Russell 2000 equity future contract. So it formed actually on Friday a new profile. And support is down at 2025.60. Then the center's at 2091.10. Oscillator and change line at 21.42. And the top of that profile, 21.56. Now, we have taken out, didn't close below, but we have traded below Friday's low out there. We most certainly have not done that with the ES Mini or the NQ. So you can see that this is certainly weaker than the other two instruments that we looked at out there. So here you've just got support and resistance, no bottoming pattern that formed out here for any of these instruments. In other words, there was no A to B equals CD pattern. I'm not saying they didn't bottom. I'm saying that it does not have one of the bottoming patterns that you and I look at on this show. And lastly, let's go take a look at the Dow. The Dow equity future contract. Where did I put that? Is this it? No, that's not it. We'll come back and actually take a look at that. But this should be the Dow here. So the Dow, just like the Russell 2000, no bottoming pattern. Doesn't mean it hasn't bottomed. If we take a look at the equity future contract, it's a bearish structured profile. That price is trading into the resistance zone, which so far is holdings between 39,695 and 39,984. In the case of the cash index out here, its next level of resistance would be up around the 39,777 area. Now, if you take a look at the Dow equity future contract, it traded lower at the open this morning, but did not get or tick below Friday's low out there. So we're going to go with more bullish than it is bearish. Nothing for the Dow Diamonds. Your resistance zone is going to be between about 397.76 and 398.47. You close about 398.47. You'd have a profile change in trend. And the equal weight number is going to be 33.62. Now, profiles are well above price, so watch that 33.62 for EDOW out there. And let's finish this off by taking a look at the semis and the SMHs out here. And if we take a look at those, we got daily and weekly, the semiconductor index on the left, and you can see that price right now is taking on its oscillator and change line. Let's open up that chart. It has a Gartley buy pattern, much like the NDX, and many of the indices on last week on Thursday formed those patterns. Now, the oscillator and change line is a key level. At day's end, if we see a close above 47.70, that'll be the first time we've closed above the oscillator and change line since about July the 10th out there. So you'd have an oscillator and change line change in trend signal, and that would suggest a further rally. The SMHs have similar but not the same constituents inside them, and that's why they're a little bit different. And the SMHs out there, which you can trade, you can't really trade the SOX out here, but if you take a look at the SMHs, that's your one way to do it. Again, different set of instruments, different weightings out there, but what we can see here is price is now above its oscillator and change line. So the key number to be watching at day's end is 226 and change. I've got about 226, call it probably 226.50, something like that. If price were to move lower, that number would move lower out there. So watch the 226.50 area. Price closes above that. That increases the odds that the SMHs are going to rally further. If you get the SMHs to close above their resistance level and the semis to do the same, well, then you'd have double gie. I don't know what that means, but what it does mean is you'd have double confirmation that price is likely to rally further. So those are your primary indices out there. I hope that helped each person with regard to what the market's intent is, or at least the levels to be watching. Now let's go ahead and move on to some of the requests that have come in. The first one coming from Tom G. By email, and Tom wants to take a look at two instruments, I believe, NVDL, which we have up on the screen, and NVDA, NVIDIA. So in the case of NVDL, it is right now dealing with the first level of resistance, Tom. That's the bottom of its profile, and that's at the low of 50.62. The profile above that, which is the center, is at 55.24. What you'll notice if you're watching this on Tiger TV or Inside the Den, that this is a bullish structured daily profile. Price has been below it for 2 consecutive days. So, Tom, if an NVDL rally price can get above 50.62, it should target 55.24. 55.24 is where a counter trend move would come to an end. If you see NVDL close above 55.24, then we're off to the races. Those races 62.17 being that next price target. The weekly chart looks pretty bullish. We're trading above the top of its profile out there. and no real comments on the monthly time frame. So I know you also wanted to look at, or maybe you only wanted to look at, I couldn't tell for sure, was NVDA. So let's take a look at NVIDIA out there. In the case of NVIDIA also has a daily bullish structured profile. Price was below it for more than 2 consecutive sessions. That says if the move is only a counter trend move, which at the moment, that's what we would say, price would find resistance price would find resistance at 111.40. But it's also at the bottom of the profile at 109.19. So between 109.19 and 111.40, if NVIDIA were to close above that 111.40 area, then its rally is more than a counter trend move and would suggest a move up to profile resistance. That's at 118.05. Now, price is not closed above the top of a profile in quite some time. The last time was on July the 10th out there. So if we do get a close above that 118.05 level, you'd have a profile change in trend. You would have a oscillator and change line change. You'd have all kinds of change in trend. Basically, it would be suggesting a further move higher out there. On that weekly time frame, you've got a 1 to 1.272 A to B equals CD pattern. It has not generated a bullish reversal candle. Doesn't mean it won't rally further. Its level of resistance up at 114.50 out there. So Tom G, I hope that helped you out with both NVDL and NVDA. Steve Rhodes with TFNN. We'll come back. We'll take a look at XPEV, SWIM, and VFC.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly Gold Report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento Friday, July 12th and Friday, July 26th, 9 a.m. to noon Eastern Time for 3 hours of live trading. For this month only, use promo code LarryJuly24 at checkout to save $50 on your first month's subscription. For all the information and to reserve your spot today, visit the front page of TFNN.com.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Let's go out to Denver, Colorado, where it's supposed to be just about as warm as it is here in Delray Beach. Let's speak with Ron. Ron, thanks for calling, and thanks for holding. How are you today?
Great, Steve. First of all, last week I had sold puts on Microsoft, and you said it would rally for 2 days, and you were right on. And when it rallied the second day, I bought back the puts, took my profits. Then it fell for a couple of days, and I sold puts again for Friday, and it also worked well. So I did it twice on Microsoft last week, thanks to your advice.
Well, thanks to your action. I just read the charts for you. You took the action.
But United Health, the great health company, really got killed Friday. So I sold some puts on it this morning, UNH, and I just wondered, I sold puts for Friday. What kind of legs or staying power would it have on a recovery?
So if we take a look, we got the charts up for UNH. Let me make sure that that's what's showing up on my screen. It is. And on the daily time frame, what this generated was a Rhodes Momentum Indicator top back on August the 5th. And what that did was that took price back inside its profile, and it was a bullish structured profile. And on the trading days of August 7th, and then again on Friday, what price did was it found support in the buy zone. That's a buy zone of its daily profile. So this has strong support between 555.62 and 558.43. We are trading above Friday's high. Price more likely than not, Ron, is going to go target the top of its daily profile. That's at 572.47. Do you have any questions about the daily chart so far?
No, I just wondered, does it show when it moves up? It moves up for maybe 2 or 3 days or something, like you pointed out one time?
Sure. So if we take a look at its dance steps out here, the thing is that this has really pretty much been in a bullish trend. So if from a bearish trend, let me go to try to find, a time period where it was clearly bearish. So I'd say right about starting with around January 5th, the beginning of the year. So here we've got bearish moves to the downside. And your question is, how many days to the upside of consecutive moves do we typically get? Well, the first rally was a 2-bar rally that took us into a 2-bar move on January 23rd. We then had another 2-bar rally into January 29th, the 3-bar rally into February 9th, more 3-bar rallies, 2s and 3s. So 2s and 3s are basically the number. If this is just a counter trend move and we're moving to the downside, I don't know. If it's a bullish move, then 2 to 4 days are certainly in the bag. So this is going to be day number 1. Most certainly. And because we're trading above, now, look, if we close below Friday's high out there, then I might not be as bullish, if you will. But price has that top. It found support where it should have found support, tested that level twice. Even let me see from a volume standpoint, the first test was 4.3 million, second test 2.9 million. So that tells us, Ron, that the dryers have dried up, the buyers, the sellers dried up between that 555.62, but primarily at 558.43. So I think this heads up, whether it's 2 days or 3 days, I think it heads up to test the top of that profile at 572.47. And the reason I suggest that is, we're trading above profile levels on the weekly and on the monthly time frame chart as well as above their green oscillator and change line. So I would say yes, 2 days is more than likely out here, Ron.
Okay. Thank you very much, Steve. I sure appreciate your advice.
Sure. So let me give you one more thing.
I did this morning after your comments, I sold puts on the QQQs to expire tomorrow. We'll find out how that works.
Yeah. Hey, one other level I can give you on the UNH is I just happen to have the 30-minute chart out here with its 30-minute TD9 count to breakdown and breakout levels. So the next key level, this is just on a 30-minute basis out here, Ron, is at 568.94. That's where on a 30-minute basis, price should run out of steam and find resistance. If price closes above that, and certainly 2 30-minute bars will close above 568.94, then that just simply confirms what we looked at when we just took a look at the daily time frame. All right, my friends, okay. So I just wanted to share that with you.
Thank you, sir. Appreciate it very much.
You bet.
Thank you.
And I appreciate your call. That was Ron in Denver. That was for UNH. I think. Yeah. So let's go to our next request out there. I believe that is for swim. No, that wasn't it. It was. Let me see if I may have gotten this stuff out of order. XPEV. We'll come back to swim. So this is for GTE, XPEV. So GTE, XPEV negated a daily TD9 count bottom on August 7th. So that was last week. And that gave you the signal that price wanted to move lower. The question is move lower to where now out here? And that is a great question. And I think that if I draw in the A to B equals CD pattern to the downside, it would suggest that this, well, let's draw it in. I'm going to suggest it visually. It looks to me like this would suggest that this thing is headed out of business. And that's not what I'm saying is going to happen out there. But the A to B equals CD pattern to the downside would get you down to the 580-ish level. So that's likely where price is headed to. We're in bar number 6 today. We're in letter number F, so we don't have any kind of bottoming signals, but we may get something over the next couple of days. But I'd say it's that A to B equals CD pattern that we're likely trading into. If we look at the weekly time frame chart for XPEV, you're trading into a swing point from April 25th. That low is a key area to watch, 655. That swing at 63 million shares. I'm not going to try to do volume right now, but you'll want to watch that level. If price tests and rejects it, and it certainly does with lighter volume, and you get a daily bottoming pattern out there, then that would be a solid potential buy. I say potential because you've got battles up top because you're trade below profiles and everything else out there. The monthly chart, quite frankly, looks just god-awful. But let's just focus on the daily and the weekly out there, and I've given you the parameters there. So GTE, hope that helps you out with regard to XPEV. Dan wanted to go for a swim. I'm up with you there. If we take a look at swim out here, this thing is a little rocket ship. You can see a gigantic A to B equals CD pattern to the upside. We're well above the 1-to-1 level out there. So Dan, the first thing I'd be watching for as a signal of a short-term top, a daily top, would be some type of bullish reversal candle. We are in bar number 4 of a TD9 count. Nothing to worry about there. Weekly chart last week closed above a TD9 count breakdown level of 477. We are trading above the top of its monthly profile. So all of this suggests higher price out there. Let me open up this weekly chart, see if there's anything else that I can really see out here. Let me do this. Let me change that indicator so I get more than one of our TD9 count lines out there. Let's go ahead and put 2 on this screen, see what it comes back with. Next level, we're above that level. Let me do that again. Sorry about that. So, boy, this is really suggesting a very strong bullish move. Now, Dan, you didn't need me to tell you that, but let me just put 4 in case we do that same thing. Let me apply. Oh, my goodness. Let's see. What do we got? Okay. So, Dan, the next target on a weekly basis up at $13 and change out there. So pay attention to the daily time frame. You are known as ABCD. So all you got to do is watch for that bearish reversal candle, and that would give you your sell to D point pattern, and price should then pull back and test a level of support. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're taking a look at VF Corp out here. VFC is a ticker symbol, which formed a Rhodes Momentum Indicator top on Friday. Today, that's taken price back to support or towards support. And support will be down at the 1665 level. We've been to a low today of 1673. That's the top of the profile. If price were to close inside that, Dan, then I would suggest to move to 1621 or 1576. But it's possible that top of that profile holds as support, and then it starts to rally. Of course, what you'd be looking for is a move above that green oscillator change line, currently printed at 1717. The weekly time frame chart last week negated a Gartley sell pattern. So that's pretty strong. You had the A to B, B to C, C to D, and then you had that bearish engulfing candle on August the 2nd. Now, I didn't draw the pattern in out here. I just used my cursor to go to the swing points out there. But we did get a bearish engulfing candle the week of August 2nd. It was negated last week. Price is back inside its profile, but without any kind of a top out here in its weekly chart, just day number 1, watch that 1665 level. You do have a consolidation, Dan, in the monthly time frame chart. That's between 1197 and 1875. You clear 1875, this thing is really off to the races, to the upside out there. So the best I've got, well, let's look at an intraday chart out here, see if there's anything there. So this is suggesting that we actually do head lower. This being the 30-minute TD9 count bottom that was negated at 11 o'clock as we came onto the air. Now, its next target to the downside would be an A to B equals CD pattern. So let's see where that takes us to. We'll draw on the A to B. Yeah, and I'll just simply move that over to the C point out here, which would be about right there. So you're looking at about 1640 or so. As price gets down there, what you'd be looking for is some type of bullish reversal candle to confirm a Gartley buy pattern for the 30-minute time frame. If you don't get that, then 1578 becomes a price target to the downside. So let's watch 1665. That should reveal some information to you, and I hope that the rest of the analysis did as well. So thank you for your requests out there. Let's go on to our next request, which is coming in from Mohammed, and he'd like to take a look at ticker symbol NUE. So let's get that up on our screen. That is Nucor Corp. Is this it here? Yeah. So if we take a look at Nucor, today is going to be bar number 8 of a TD9 count pattern, Mohammed. And if price closes tomorrow below 145.19, you'll have a confirmed TD9 count bottom, and that pattern will complete on Wednesday. So this is very near a TD9 count bottom. The weekly negated a TD9 count bottom pattern last week. The weekly is suggested to move to its next breakout level, and that's at 138.32. We can see on a weekly basis price was targeting that breakout level back on the trading week of October 27th of 2023. A TD9 count bottom held, or formed out there, and then we saw that nice huge rally up there when it got up plus above 200. So when I take a look at New Mohammed, on a monthly chart, you've got a Rhodes Momentum Indicator top with price trading to the buy zone. And the buy zone is basically between 126.81 and where it's trading right now. So how I'd be playing it, I'd be watching the TD9 count for the daily time frame. Again, that could be tomorrow or Wednesday. If it's going to be tomorrow, I'd start going down to short-term time frame charts, identifying some type of pattern out there. Really, I'd look at the 30, the 65, and the 130 out there to see if you've got anything. So let's retake a look at this if you'd like on Wednesday. Unless you see some type of other action of significance come tomorrow. So I hope that helps you out with regard to Nucor out there. Let me see if I've got any other requests out here. Make sure we hit them all. And I don't see anything by email. Thanks, Steve. I've used Recover. Okay. Basic comments. Got it. So I don't have any other requests in. Maybe somebody will put one in. And let's take a look at what's going back on the intraday stuff out there. So, well, first, if we take a look at the daily equity future contracts, you're going to see just how important those oscillator and change line levels are, at least when we take a look at the ES and the NQ, both of which have tested those levels. So, again, the real key area here in the ES on a daily basis is going to be 54.09. Or 54.0850, price close above that. Odds favor we continue the rally. And in the NQ out here, it's really going to be that oscillator and change line, which right now is printing at the 18,690 level. If we get it close above that, we are likely to further the rally. That's what's going on there. If we take a quick peek, let's see what intraday charts are up here. They are for the ES Mini. And on the ES Mini, as we look at, I'm just looking for the best topping pattern. Quite frankly, it looks like it's coming from the 60-minute time frame chart. So here's what I would be, well, let me just open up this 15-minute chart and see if I can see an A to B equals CD pattern. Did I get below that? No, I can't use that. Yeah, so I don't really see the pattern out here that identified that top, but it was certainly a top in prices trading. It's still trading above the top of its profile. Okay, so here's a good one. Even though I don't show the top, it really doesn't matter out there. You know, things can top without one of my topping signals or bottoming signals out there. But here's what we do know. Regardless of that, we know that price started trading lower at about 11.15 out there. And what we can see is price pulled back. See how this price was trading above this bearish structured profile for a 30-minute time frame. And as you know, you probably get tired of hearing me say that, if the move to the downside was only a counter trend move, price would find support, and you know I would have said this, 53.60.25. That's the center of that bearish structured profile. And in fact, that's exactly what happened both at the bar at 11.30 and the bar at 11.45 out there. Now we're above the top of the profile. So it could bust it to the downside, tells us the move for this time frame, 15 minutes that is, was only a counter trend move. Next level of resistance for the ES Mini is going to be 53.77, and then above that we get back to that daily time frame chart, both the oscillator and change as well as the top of the profile at 54.08. So that was pretty cool. We could pull that up and I could show you. The 60-minute time frame chart is also attempting, see how we take a look at it. It is, well, it needs a bearish reversal candle to confirm a top out there. Here all we've got is price pulling back. So on the whatever time frame it was that we were looking at, maybe it was I don't remember, 15-minute might have been. On a 60-minute time frame, price found support where it should have, which was its buy zone. The buy zone was between 53.44 and 53.56. So the move to the downside, whatever started that little flush out there, looks to me to be a false move to the downside, at least as of 11:49 in the morning out there. So I hope that helps you out with regard to the ES Mini. As I mentioned, let's take a look at Goldilocks. Let's put gold up on our screen out here. We're in the December contract. This will take a moment or so to go ahead and populate these charts. We do have gold. I believe gold was trading, maybe is trading, above the top of its profile. That wasn't it. No, it's not trading above the top of its profile. It's trying to rally further. Well, okay, so I have two different sets of profiles. Sometimes that just happens. Price is trading above the top of its profile using Stevie's white background charts. That was at 24.84. Just looking for any other kind of topping signals out here, and I don't see them. Really don't see them. Gold is likely to rally further as well. Steve Rhodes with TFNN. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
In the world of trading, only a few names stand out like Larry Pesavento. A pros pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We're taking a look at ticker symbol AZEK. This is for Dude inside the Tiger's Den. And as we take a look, this is the AZEK company out here. So let's look at longer term first. This formed a sell the D point pattern in April of 2024, and then it continued to move lower. And what it's done this month here, Dude, is prices pulled back to the buy zone. And the buy zone was between 32.76 and 35.33. The low for the month has been at 35.48. So price found support. It had a topping pattern. Price found support. You're asking me, should you go short? No, I don't see that because support is held. Let's look at the weekly time frame chart. Weekly time frame chart forms a TD9 count top. That TD9 count top formed on March the 29th. Price continues to move lower. And what does it do last week? It finds support at its TD9 count breakout level, 37.86. You've got an A to B equals CD pattern to the downside out here. A bullish reversal candle would confirm a buy the D point pattern. Well, turns out the daily already has a confirmed buy the D point pattern, and it confirmed that signal today. And what we have out here is we had a gap to the upside, but we also had a gap to the downside a few days ago. We have an island bottom pattern confirming, an island bottom candle confirming a Gartley buy pattern, a buy the D point. So no, I do not see any reasons out here. That doesn't mean it can't go lower, but you've got a bullish signal now pattern on the daily time frame. Weekly, just getting back to the breakout level can be a bullish call, and on a monthly chart, getting back to the buy zone can be a call out there. So not saying this can't go lower, but I wouldn't step in on that trade here. What the bulls have told you, what buyers have told you with regard to this instrument, is they have defended their positions and at each of those levels of support. So, dude, I hope that helps you out, and I also hope that I'm right, because I don't want to get this thing wrong, and you miss out on a potential good trade. But I just don't see it in looking at the daily, the weekly, and the monthly charts out there. Well, folks, it's been great to be with you today. Stay tuned for all the great programming. I'll look forward to being back with you on Terrific Tuesday. Until then, please have a magical, a marvelous Monday, and I look forward to seeing you tomorrow. Take care.